Hey, welcome to the Market Minute. This week we want to talk about the storm that's coming. Well, no, we're in the middle of summer, so it's beautiful. We got sunshine outside, but there's a lot of people concerned there might be a storm brewing on the horizon in the stock market. Here's an article in the Financial Post that says the storm is coming. So, are we in a position where we're about to see an adjustment to an overvalued stock market? Larry Sarbat suggests that today's incredible ease in overvalued markets could find the foolhardy investor struggling to stay afloat. Time will tell. He goes on to suggest that you look at some of the things that are happening in the marketplace: an inverted yield curve, numerous indicators of a slowing economy, tariff wars, geopolitical tensions associated with Iran, Brexit, etc. You add all these up and you have to wonder, why are people continuing to pour money into the marketplace? Well, many would suggest the reason they're pouring money into the U.S. Stock market is, well, where else are they going to put it? There's no alternative. I understand that argument, but it really raises a red flag for me because it makes me feel like that's almost an argument for building a house of cards. I'm going to add a link to this. If you're receiving this as a newsletter, you're going to get the link to the Newport Private Wealth Q2 report. I just watched that today and I thought it was a fantastic overview of the markets, where things are, and why it's important to take a defensive approach. A couple of quick things is, number one, they make a comment. I took some snapshots from it. The longest U.S. economic expansion running from 2009 to 2010, 19, that's a 10-year run. Now, we all know nothing goes up in a straight line forever. So if you're in a 10-year run, it's the longest in history. What might that suggest? Well, people again say, well, I'll move from equities to bonds. Well, bonds are in bubble territory. We're seeing the 10-year bond yield as of June 30th get down to one of the lowest ever. And as bond yields drop, the price goes up. Again, argument would be that we're in for an adjustment or a correction. So where are they finding value? Newport talks about finding value in alternative assets. Well, again, the alternative assets that we work with, that's why we are referred to as Diversifi Alternative Assets. That's the name of our company. And what are some of the companies we work with? Well, AP Capital. You've heard me talk about them before. This is the monthly newsletter. If you'd like a copy of it, send me an email. And AP just came out with their most recent monthly Fast Facts. They send this out every month. This month, again, the 112th consecutive month that they've had a distribution of at least 7% per annum. That's 7% per annum for 112 consecutive months. Pretty solid, steady, and secure. And again, ICM Property Partners Trust, we've now finished our report on them. If you like the Diversifi report on ICM, they've now put two funds together and they're fast approaching a $100 million fund, purchasing commercial assets throughout North America. Very well diversified fund that's targeting, again, between 7 and 12% returns. And lastly, SeeMLS is a new mortgage fund that we're going to be launching here in the upcoming weeks. So if you'd like some information, talk to me about that. You hear me talk when we make reference to private equity. We really want to focus on institutional grade. Well, let me show you some of the companies that SeeMLS is working with. You got your Royal Banks of the world, CMHC, Phillips Hager North, ATB. Again, high quality institutional grade partnerships. And that's what we want to focus on. Number one, get you diversified outside of the public market so that you're prepared for the coming storm. You've got some diversification, but you're also not taking unnecessary risk by partnering with a no-name company that doesn't have institutional partnerships already. Nothing's guaranteed, but I think there are opportunities to prepare yourself for what I just think is inevitable. So if you're sitting with mutual funds right now, you got stocks and bonds out there, you're not sure what to do, give me a call. Let's set up a portfolio analysis or do a gap analysis and analyze what makes sense for your financial future. Folks, that's the Market Minute for this week. I hope you're having an awesome summer and have a great time. We'll talk to you soon. And remember, Peter at peterkinch.com. Send me an email.